Saturday, February 12th, 2022, an absolutely beautiful day here in Palm Desert, California, 90 degrees. It's just incredible, the weather we're having here in February, but I know most of you did not tune in for a weather report. We have much more serious things to talk about, and I want to talk about a lot of things on this video, and I want to start with this Fed emergency meeting on Monday. What do all of you think about this meeting? Is this a prelude to a rate hike coming in the next week or two, or will they wait till March 9 to raise rates? I think that there's probably a 50-60% chance that we're going to see a rate hike before March. That's just my humble opinion. This meeting may be absolutely nothing, but why an emergency private meeting on Monday? Let me know your thoughts down below. This inflation, it's here to stay, ladies and gentlemen. Inflation is here to stay. Many of the economists are predicting 200 basis points this year, or by the end of this year. So that's 2 points, 2%. 50 basis point hike in March. I think that could even come sooner. It definitely would not be a surprise if we saw that in the next few days to next 10 days. But the question is, what are these raising rates going to do for inflation? They're going to do nothing for gas prices. It's going to do nothing for a gallon of milk. It's going to do nothing unless they raise rates above the rate of inflation. I think all this is really meaningless. And we still have people connecting inflation to the supply chain disaster out here on the West Coast. No, this inflation has not been caused by supply chain disruptions. It has been caused by massive money printing. And the Fed is way late to the party. The Fed should be very, very concerned. They should be very, very scared about the position they are in right now. We have way too much liquidity in the system because of all the stimulus, all the QE, the 0% interest rates, and we've got a real disaster on our hands. And the question is now, does the Fed have the guts or the stomach to do what they need to do? Most people would say, no way, they do not. The economy is slowing down. That's a fact. You all know that. There's people out there that would disagree with us. They think the economy is roaring, but these are the same people who believe in Santa Claus. The economy is collapsing right before your very eyes. You've been watching this economy collapse for the last couple of years. I was watching it collapse even before then. Many of you too. You've seen what was happening to retail. You saw what was happening to the shopping malls. You saw what's been happening over the last few years to your bank accounts, to your wages. This is no surprise. This is going way back much more than 2 years ago. Do not forget what happened in 2008. They tried to paper over this crash, and it was just a temporary fix. It was a Band-Aid on a gunshot wound. We still haven't fixed what happened in 2008. And the problems have just gotten bigger. The deficit's bigger. The debt's bigger. The inflation bigger. This is what happens when you put rates at zero and you pump the system with tons of artificial money and you tell people to stay at home. The economy is slowing down. The question is, ladies and gentlemen, how much more will it slow down? I think it's going to come to an abrupt halt. I don't think we even have much of an economy at this point, unless you base it on people just consuming with money they don't have. That's our economy. People buying things with money they don't have. Buying things made in other countries. We are making other countries very wealthy. We're watching over the last couple of years, Main Street just being pulverized, being beaten down. When they raise rates, ladies and gentlemen, Wall Street better be very, very careful, because they may take a beating also. I watched a show on Kitco last night. I don't remember the guest's name. I think these were asset managers. And one of them said this, and this is what's really concerning, because it's these cheerleaders, not on Kitco. I think it's a great show. Stansberry Research, another great show, but very, very good show. And they interview all types of people that have different, beliefs and opinions on these markets. And I think that's healthy. But, when I'm watching some of these other ones like Fox Business or CNBC, nothing but cheerleaders. But one of these gentlemen last night, and I don't know if he was an asset manager, I believe he was, I'm not sure, but one of them said this last night. He says that he didn't believe we have a debt bubble. Now, my question is, what do you call $30 trillion in debt? What do you call $180 trillion of unfunded liabilities like Medicare, Medicaid? What do you call household debt at 15.6 trillion? Credit card debt over 1 trillion, auto debt, student loan debt at all-time highs. Student loan debt, I think, is at $1.76 trillion. So I don't know what he considers a debt bubble, but I see a lot of debt bubbles out there. But this is what's concerning, is when you have these people coming out on these shows and telling you with a straight face that there's no debt bubble, people coming out saying nothing to be concerned about, just watching these shows on a daily basis, and not Kitco, but again, back to Fox Business, CNBC, and these ones that are on the television. These people just coming out cheerleading, trying to calm everybody down. They want you to keep buying into these markets. And it's very, very dangerous. People are receiving data that is completely wrong, and they are making life-altering decisions, future decisions, or decisions today that will affect their future on the data that they're getting right now. And the data is warped. The data is incorrect. Much of it a lie. And I think you have to be really, really careful what a lot of these people are saying. And it's really about what a lot of people are doing right now. The wealthy are buying gold. They've been buying real estate. They've been buying art, collectible cars, assets. They've been putting cash, many of them just out of these markets, putting cash on the sidelines and just waiting. Patience is a virtue, ladies and gentlemen. But it was a very interesting show. They made a lot of great points, but I could not believe that this person just doesn't see a debt bubble. And this is why so many people have been so blinded by the greed in these markets. They can't see. They cannot see. They have been completely blinded by the greed in these markets. They don't want to see reality. They don't want to see the truth. They don't want the party to come to an end. They don't want the punch bowl. They don't want the Fed pulling the punch bowl away from these markets, because they know what it means. They know that a beating is coming to Wall Street if this happens. The hedge. Fed rate hike will cause hyperinflationary Great Depression. John Williams says hold physical gold. Not paper gold, not gold stocks, physical gold. I agree 100%. This is the time to be holding real things. This is the time, ladies and gentlemen, to get real. First time home buyer affordability worsens as mortgage rates jump most since 2013. I think we're sitting at 4.02% on a 30-year right now. And this article also coming from The Hedge, and it brings something up that I was thinking about earlier today, and it's moguls. We now have so many people who think that they are real estate moguls. I know somebody right now who has got their house in escrow, received an offer, all cash, quick close, $50,000 over asking, no contingencies, everything you read about, he got. And now he's trying to find another house, and he's out making offers, and you have people that you're offering all cash, 10-day close, no contingencies, and they're actually countering back contingencies, saying, well, we need to rent the house back for 2 months, 3 months. We're taking all appliances, and by the way, no charge on the rent back. And some of them even countering back higher prices. So you can come in cash, 10-day close, no contingencies, and they're countering back with a higher price and other contingencies. Absolutely crazy. Now, I saw this movie play out back in 2007 and 8. And people were doing this with homes. They were doing it with land. And, people got so greedy. And, remember the saying, pigs get slaughtered. And it's just absolutely amazing to see what is going on. Somebody buys a house for $150,000 and now they want $500,000. They want it in cash. They want a 10-day close, no inspections, no contingencies. That's it. They are just moguls at this point. They don't even care they don't even care about a profit now. It's just greed. They want massive profits. And a couple years ago, these are the same people who, living paycheck to paycheck, car broken down in the driveway, $18,000 in credit card debt. But now this bubble has created real estate moguls. And these are the same people who are very unsophisticated in the real estate market, who some of them have made money, some of them get lucky, but some of them are going to get greedy and stay greedy too long. And this market's going to change, just like it did when it collapsed in '08. The same type of people who said, well, my 8,000 square foot dirt lot these things have been selling for 150,000 like that. Well, now I want 200. I'm going to wait till the market goes to 200. Well, it never got to 200 in certain areas, and those people's dirt lots that were selling for 150, but that wasn't enough. They wanted 200 or 250. Well, the market crashed, and they were lucky to get 10 cents to 20 cents on the dollar after the crash. And so, to me, it's like if you can sell something, if you can get out of the market, if you can get out of some crypto and you made a profit, ride the wave, ladies and gentlemen. You made money. Ride the wave to the next deal. Sit it out for a little bit, see what happens. But this greed is going to teach a valuable lesson to so many people, and they're going to get what they deserve. We have a big problem, getting back to this article, with these first-time home buyers. Typically, the strength of price gains is associated with the strength of the local job market. Many of these areas have seen 20, 30+% increases in home prices, yet wages have only gone up 3 to 5%. See, that's a big problem. When wages are going up 3, 4, 5%, and the real estate market, home prices are going up 20, 30, 40%, something doesn't compute. Now, a market might get away with that for a couple years, but sooner or later, it all catches up. You cannot have wages going up 3 to 5% and markets going up 20, 30, 40% plus. It does not work. Sooner or later, reality kicks in, and these markets are going to crash. We're seeing a lot of investment money, institutional money pushing up these bubbles, and people are literally forced to hand over half of their income to a mortgage payment. This bubble is going to burst, ladies and gentlemen. These numbers don't compute. First-time buyers are increasingly being forced out of the market. National Association of Realtors reports mortgage payments for the first-time home buyers in the fourth quarter of 2021 jumped to 25.6% of their household incomes. Up 3.2% from a year prior. And remember, this is before taxes, ladies and gentlemen. This is before taxes. Very difficult also to come up with a 20% deposit on a home when these prices are skyrocketing like they are. Here in California, average price of a home, $800,000. You need $160,000 down to purchase that home. So this bubble, this artificial bubble that is being just produced by massive injections of this artificial funny money that was given over to these institutions, financial institutions, who have come in and offer you $50,000, $100,000, $200,000 over asking. They don't care because they're borrowing money for literally nothing, and they've created a massive bubble. And this bubble is going to absolutely decimate and crush the housing market. I'll switch gears here real quick. Another article coming from The Hedge, an absolute mad rush. Californians confess why they're fleeing the state. And this was a really good article. And as I said earlier, average home price, here's a good reason to flee. Average home price in California is $800,000. The average rent in California, this is for a dump, okay? This is for a dump built in the 1970s, $2,500 per month. This is for an apartment. Highest top income tax rate sits at 13.3% right here in California, 8.4% tax rate for businesses. What else? Why would you leave California? So many people ask me why I'm leaving. Well, regulations, high taxes, high labor costs, high utility and energy costs, the declining quality of life. We are seeing more and more crime, more and more homelessness, infrastructure falling apart. You see graffiti everywhere. It is not what it used to be. The California dream, ladies and gentlemen, in my opinion, is over. This state does not resemble the state that it once was. And if you go back, if you go back, 20, 30 years ago, you wouldn't recognize the state of California today. In fact, you go back 10 years ago, and it would be hard to recognize with what we have now. They interviewed a woman in this article who's moved out of California with her husband to Spring Ranch, Texas. And she says, it's not what we remembered our area to be. She says, we noticed increased crime, gangs coming from Los Angeles and Riverside. They were coming into their area of Yorba Linda. Now, I had a very good friend that lived in Yorba Linda, and I lived at one time in Fullerton, next to Yorba Linda, very nice area. And I think now they're worrying about gangs from Los Angeles and Riverside coming to a city like Yorba Linda. What a travesty. Property crime exploding, homeless crisis exploding, graffiti exploding, gas prices exploding, terrible leadership in this state, trash everywhere. It's really such an injustice that has been done to California. It's such really criminal what they've done to probably arguably the most beautiful state in America. It's really sad, and it's another reason why I'm leaving. Washington Post, IRS backlog hits nearly 24 million returns, further imperiling the 2022 tax filing season. So I hope that you're not waiting on your money if you're one of these people, but think about that. IRS backlog hits nearly 24 million returns. Unbelievable. I mean, so we can't unload ships. We can't get product to stores. People waiting for their tax returns gonna have to wait, I guess, and they got bills to pay right now, and they're waiting on the IRS to get those tax returns. 24 million people. It's just incredible. We always talk about how wealthy and rich America is, even though it's the biggest debtor nation, how advanced we are, the technology that we have. But again, we can't unload ships. We can't get people their tax returns. It's amazing we can even turn the lights on at this point. Another article today, systems issue knocks out trucking giant Schneider. This is a concern, and I bring this article up. Schneider Trucking, a huge trucking company, their systems went down on Thursday. I don't know if they're back up. I haven't heard anything, but they said that they cannot receive or book freight at this point, cannot update its invoicing system or pay its couriers. Did they fall victim to a cyber attack? Was it a glitch? Nobody really knows at this point. But ask yourself this. If they can knock down the system of a freight company the size of Schneider, this is very concerning, because how does food get delivered to the store? It gets delivered by trucking companies. And if the system fails, if there's a cyber attack and they cannot receive or book freight, if they can't pay their couriers, nobody's shipping meat and poultry to your grocery store. Nobody's shipping cereal. Nobody's shipping bread. It's not happening. So the system is so fragile. And I bring this up because I really pray and hope that all of you are putting some food away, because we're living in a very uncertain world. Anything can happen. Glitches, cyber attacks, a grid goes down. All it takes is for a couple of these big freight companies not to be able to operate, and we're not getting food. You're not getting food at your Walmart, the grocery store. And so again, it's another reminder of why we must be prepared, why we all must be critically thinking outside of the box and really think about the potential of serious risk, whether they're financial or they're related to anything that is tied to technology. Because everything is tied into computers. People have their entire lives. Every cent that they own is on a computer screen. And literally everything shipped by a truck is on a computer screen. And if that computer gets shut off, your money's gone and your food's not going to be delivered to the store. And that means you're broke and you're not going to eat. So again, this is why I think you should have cash put away, why you should have some silver put away for bartering, why you have to have emergency food and water put away. Anything could happen. And you have to ask yourself, are you prepared to weather a storm, a financial storm, a cyber attack, a grid down for a week, 2 weeks, 4 weeks? Be as prepared as you can be. Some people can be prepared for years. Some people can only be prepared for days, but I'd rather be prepared for a few days than no days. So make sure you take a little time this weekend and work on getting prepared. Last article, will Social Security run out of money? Here's what could happen to your benefits. 2034, you are getting a 20% haircut. And this, look, the system is melting down, ladies and gentlemen, and it's so imperative that we are all our own central banks, that we are working on our own retirements. And that means, putting some cash away, putting assets away, trying to get a piece of land, paying off the house, paying off the debts. Because inflation's not going away, ladies and gentlemen, and Social Security is. And if you're dependent on a pension, or a 401k or Social Security, you better be concerned. You better be worried, and you better take action today and prepare. Because before you know it, 5 years goes by, 10 years goes by, and most people right now, older people, many people have nothing. They can't retire. They have zero in retirement. Think about what inflation is going to look like 5 years from now. Do you really think most of these prices are going to come back down? Do you really think that's going to happen? I don't think it is. Do you think wages are just going to, some miracle is going to take place and everybody's going to be making $100,000 a year? Maybe the government's going to give, everybody a check for $1 million and a Lamborghini and a free house? Not going to happen. You are on your own. You're going to see the system unable to help people because it is melting down. The system is not going to be there for you, ladies and gentlemen. You must be your own system. You must be your own central bank. So I'm going to leave it there. So much going on. Monday will be interesting. I think it'll be a very interesting week. Again, let me know your thoughts. Will they raise rates before the March 9th meeting? People out there still believe that they won't even raise rates in March. What are your thoughts? Let me know. Comment down below. I'll tell you, it's a beautiful evening here in the desert. It's quiet. It's not as busy as it used to be, I can tell you that. But there is something very, very ominous out there. People are they're different. They are just short-fused. They're in a hurry, honking horns, cutting in line. The restaurants are in massive trouble. I just cannot even believe what's happened to the restaurant business in America. So many are gone forever, and so many are going to be gone. And retail, it's just, what a mess, ladies and gentlemen. Words cannot even describe what's going on. You understand. 98% of you watching this video this evening know exactly what is going on. And nothing big's happened yet. We're going to see events take place that are really going to trigger things. You're going to watch these bubbles burst. The volatility that we're seeing in these markets, another red flag, a warning sign for you to get ready. The days are numbered, ladies and gentlemen, for you to get ready. I think we have much less time than many people think. And people are going to wake up one day and their lives are going to be upside down. And they're going to want to know where their money went. Where's their retirement? What happened to their dollar? What happened to the food on the shelves? Why isn't anybody helping them? You're going to be on your own. You will be on your own, ladies and gentlemen. So I'm going to leave it there. And if you have anything you want to comment, please put it down in the comments. Thank you all for the comments, because the knowledge in those comments has really woken people up. You've really saved lives. And I can sit here and talk, and people can sit here and go, oh, he doesn't know what he's talking about. He's making it all up. Look, it's CNBC, it's CNN, it's Fox, it's wolfstreet.com, it's Bloomberg, it's Reuters, it's The Hedge, et cetera, et cetera. It's all right here. Do your own homework, do your due diligence. I think you're ignorant if you're not preparing right now. I think you're doing your family a total disservice. Don't be ignorant, ladies and gentlemen. This thing is very real. And this tsunami, economic disaster, Great Depression, massive collapse, whatever you want to call it, you can call me doom and gloom all day, but I'm prepared. I'm prepared. I put cash away, assets away, food, water, plenty of security, mental mindset, walking closer to God. I'm doing everything I can, covering all my bases. And that's all you can do. But I have a very comfortable life. I don't live in gloom and doom. I sleep very well at night because I've paid off all my debts. The people who aren't sleeping well at night are the people living paycheck to paycheck, the people who are getting worried about how they're going to make their mortgage payment, their rent payment, how they're going to continue to feed their kids with inflation going up the way it is, how they're going to continue to put gas in their car to go to their minimum wage job to feed their kids, as gas is up 50% from a year ago. Those are the people who aren't sleeping at night. If you're paying off your debts, if you're putting cash, assets, food, water, security away and walking close to God, I promise you, you will sleep very, very good at night. That doesn't mean that we're not going to be a part of this collapse, that we're not going to feel some pain. We are going to feel the pain. There's no way we're going to be able to ignore or be immune from what's coming. So I don't believe that I'm just going to ride off into the sunset or sit out here and hit golf balls while the whole economy's collapsing. That's not going to happen. First off, I won't be here. I will be out on a ranch, and I will be watching it take place on a television, not my front window. So I'm going to do whatever I can to put the odds in my favor, and I advise you do the same.